ride the floor to the floor, what was left? A shoestring budget on call, then these new styles came along. Some on to the next, so some other hit their own trend. Colors faded on airbrush, centerfolds dated, make you feel old and jaded. The goal was to make it and we made it, but we didn't know how to keep it like nice kicks that wouldn't fit. Only way was to box it up and duct tape it up. Stored underneath the bed and open it up. Once in a blue moon, think about a cool ending to a story that ended too soon. Gotta bring back the feeling. I'll do anything not to be stuck on feeling. The pain can be sharper than a scalp to a patient. To an open heart, it's a daily operation. After 6 comes 7 and 8. Access code to the pearly gates. This ain't heaven can wait. And the speak of fate, a finale to a play for my mate. I see the angels draw the drapes over the earthscape where the mind and the spirit are great. Gotta finish what we started, so I cut the tape. As the records will stay and rotate.
Hey y'all, we're gonna get ready to go in just a second. Gonna get started in just a couple minutes, okay? Hello everyone, my name is Dean. Let's talk crypto. Today is May 4th, 2023. And this may be the biggest breakout we've had in crypto in quite some time. Okay? Lots of things are going on here. And I felt like going live just because it's a special occasion. You don't always get this kind of price action, these kind of market conditions, this scenario for such a big move, right? Such a large trend change. So this is why I wanted to go live on the eve of a full moon. I think it is a very important time to pay attention to what's going on in the charts. Guys, I hope you're having a great day. So let's get started. All right, Bitcoin. Everybody should be keyed into this right here. Okay, we're on the 5-minute chart, and we're looking at what has been going on pretty much the entire day. It's likely, very likely, that this is an accumulation pattern, okay? An accumulation pattern where, if you zoom out for a second, you see Bitcoin has gotten into from a move up and then a 3-wave move down, okay? So if we know anything about Elliott wave analysis, we know that corrective waves move in 3, 1, 2, 3. So this is corrective, and this is likely the impulse from where we corrected, okay? Now, we know also that this cannot be fully impulsive because the time it's taken to retrace this is far too long for this to be fully impulsive. So this has to be, at best, a zigzag. So a 5 waves up, 3 waves down, an accumulation, and 5 waves up scenario. Is it just me, or is the stream laggy? Let me know if you're if I'm lagging or anything like that. All right. But it just feels a bit laggy. My cursor feels a bit laggy. Okay, so that's a 5-minute chart. That's a really small time frame. That is the medium kind of 15-minute scenario as well. But also, I want to draw your attention to what's going on, what's been happening in the past few days. In the past few days, we've essentially been putting in this really bullish, really strong triangle, okay? It's very clear. It's a symmetrical triangle. Now, I've said this before, but you don't form these out of nowhere. These form basically, so first, let me just say this. Triangles are ambiguous in that they're not clearly demarcating bullishness or bearishness, especially symmetrical triangles, right? And by definition, the volume decreases, right? Fewer and fewer people are involved. You have, if you turn on the volume, you can see this. Okay, you have decreasing volume, okay? And the price goes from one range of amplitude to a smaller amplitude. Pretty much there becomes a consensus on the fair market value of the asset as time progresses. So the buyers and sellers are determining the price and saying, well, okay, it's that's too expensive, that's too low, that's too expensive, that's too low, that's too expensive, that's too low, okay, that's just right. And at that point, the market makes a decision. And the question is, where is it likely to go? Okay, likely is the operative qualifier, okay? We don't know for sure, but it's likely to go up. Why? Because it's coming from an uptrend. And typically, these triangles are continuation patterns where, let's go on the 4-minute or 4-hour time frame so you can see what I'm talking about. The trend that was established prior to the triangle being formed is what is continued. Does that make sense? All right. Furthermore, these triangles only take place at levels of resistance. And when I say on the channel consolidation at resistance, a triangle is the definition of consolidation at resistance. People who are not really chart literate will think these are rejections, but no. If this is your resistance and you're consolidating at this level, especially in such a fashion, in triangular fashion, you're consolidating at resistance, okay? Because do you understand that a rejection would be 1, 2, 3? Quite simple. When the price rejects off of a level, you see 3 waves, and it just goes down. And that's what a lot of people are waiting for, and a lot of people are expecting, the 25K level. Were 25K likely? you would have seen not a triangle here, but a three-wave flat correction taking you down, or a zigzag taking you right back down to the previous level of support. 25K is unlikely, not only because of this 300-day support, but also because ever since we come to this level, right, mid-April, we've been consolidating, and the price, people are deciding, some buyers are saying, yeah, this is fair market value. Actually, I think it should go higher. And they're buying up the asset, even though we're at resistance. People are buying on resistance. Okay? Obviously, people are selling at resistance, but it's likely that the buyers went out just because of this previous trend. Okay? So this is very important. Now, that's Bitcoin on the small time frame, medium time frame, and higher time frame, and why this triangle is so important, and it's likely to break out. Now, the title of the live stream is Breaking a 300-Day Resistance. What is breaking 300-day resistance? Bitcoin, if you've paid attention, has already done that. Okay, we've talked about that. We've even had a similar title for a live stream, perhaps, saying that we're going to break a 300-day resistance, and we did, right? And that 300-day resistance was this, right? As you can see here, this is about 300 days of resistance broken, and that happened in mid-March, okay? So Bitcoin's a bit ahead, and that you shouldn't be surprised, because typically Bitcoin's ahead of most other assets in terms of moving, right? It moves a little bit ahead most of the time from most other assets in the cryptocurrency space. But in the aggregate, crypto has not yet broken its 300-day resistance, okay? This is important. Just because Bitcoin did it doesn't mean that the rest of the market did it. And the rest of the market is what most people are invested in, right? A lot of people own Bitcoin. A lot of people trade Bitcoin. But even more people trade altcoins. There's one Bitcoin, and there are tens of thousands of altcoins. And if you look at all of the altcoins and all of basically the whole market in aggregate, you have once again this inverse head and shoulders, and it is broken out, but it broke back down to the neckline to retest it, as you should expect. And so we have yet to break out of this pattern in the entire cryptocurrency market. This is why, if you hold anything other than Bitcoin, more often than not, chances are that you haven't really experienced many gains, because most assets have yet to break out for 300 days. Obviously, if you have been holding or trading since the beginning of the year, it's likely that you're up a bit, okay? So if you've been trading since the beginning of the year, you're definitely up. If you traded since the beginning of March, you're definitely up. But for people holding on a high time frame, right, from the last from the duration of the bear market, right, any time before the beginning of the year, you're probably down or at break even. You haven't really experienced any gains, because this is yet to break out. And when this breaks out, it's really the sign that everything is bullish, everything is in a bull market, everything is purely impulsive. So for 322 days, we've been essentially sideways. And even though you're up since January in the aggregate, there are a lot of assets that aren't. Okay, and we see that throughout our watch list. A lot of assets are still at the bottom of their bear market accumulation. So even had you bought certain assets, certain altcoins at the beginning of the year, you still may be down, because a lot of them went up and round tripped, right, in a corrective fashion. So this is crucial. This is so important. So this is on a high time frame, the pattern that we're about to break. If you go on the smaller time frames, you can see exactly what's happening. So you're at this neckline, right? You're at this neckline, and you went up correctively and you came down correctively. And that is something you expect. Every time you break significant resistance, and this is a 300-day resistance, 322 days to be exact, you come up and you have to come back down to retest broken resistance as support. That's exactly what you want to see, okay? So once that happened, we want to see a consolidation reversal pattern. So 2 degrees of AB basing and a pivot, and that's more or less what we're getting here, okay? So if we look at this, what do we see? This is an A wave. This is a B wave. Maybe the B wave is all of this, okay? This is another A wave, another B wave, and this is perhaps your final pivot. Do you see? I'm going to count it again. So this is your first, this is your first pair, okay? When I talk about AB basing, we talk about AB basing in Elliott wave theory. We want 3 pairs of corrections, 3 corrective pairs, right? We called them on this channel wave A and B, okay? That's your first pair. And then small a, small b, maybe like this, okay? That's your second pair. And then alpha and beta, your third pair or your pivot, okay? That's 3 degrees of AB basing and a pivot. Or sorry, 2 degrees of AB basing and a pivot, or 3 pairs of AB bases, okay? That's possible. That's a possible count of this reversal pattern. And what you like about this is that you're getting a rounded bottom. Remember, extremes are rounded. Tops are typically rounded. Bottoms are typically rounded. So it wouldn't surprise me if this were, indeed the completed sort of a corrective pattern to turn this local downtrend into a local uptrend, okay? So that's what we're seeing on a small time frame. So this is why we are literally on the verge of a breakout. We're at the brink of a breakout on support, you know? We're on support, and we're putting in these corrective waves. And, you know, people who don't know how to read charts, or people who think, you know, that we're still going at 25K say this is a fake pump or this is a fake move. There's nothing fake about it. There's nothing fake about it. Just look at the technicals. We are on support, a 322-day support. We broke it and we retested it, and now we're consolidating on it. There's nothing fake about that. Okay? Anybody savvy in technical analysis is a buyer at this point. Anybody savvy in technical analysis is a buyer at this point, because chances are it's more likely than not that we break up and not break down. Now, question is, when will we break up? Okay, and you could do what I did and try and count the AB bases, but also we can use the idea that today is the night, literally the night before a full moon. And what do we know about full moons, right? And I'm going to open the page for Lunatic Trader, since this is a live stream, so we have time. So remember, the data shows, and you can review the data from Lunatic Trader, from, you know, a lot of academic papers. This is well established stuff. The data shows, sorry, let's fix this. The data shows that on average, price bottoms or experiences local bottoms, right? Markets experience local bottoms at and around a full moon, specifically or precisely 0 to 3 days after a full moon. So the 0 day would be the next trading day, so May 5th, right? So 5th, 6th, 7th, and 8th. That would be your bottom, okay? Are we going to stay at this point for the next 24, 48, 72, 96 hours? I'm not exactly sure. But we are not only displaying price action of a bottom, we're displaying patterns of a bottom, but we're also at and around a full moon, which, if you know markets, if you understand how these moon phases work, you typically want to be a buyer in and around full moons. You typically want to be a seller in and around new moons. That's just what the data says and shows. Okay, so that is the total market cap and what we're doing there, and what's really exciting about that. And back to Bitcoin on the small time frame, you're exhibiting a similar pattern here of AB basing, okay? And these are hard to count. It's not like, this is exactly it. There's so many different permutations and combinations, but we can try, right? We can try to count this as your first AB base, right? This is your initial break of structure, and this is your B wave. This is perhaps the secondary pair, and maybe this is the pivot right here. Perhaps, okay? Perhaps. But what we want to look for are rounded bottoms, and we're getting some sort of rounded bottom. Furthermore, this level right here that we're at currently sits on the phi ratio of this previous uptrend. Okay, so if you take the Fibonacci retracement tool from the bottom to the top of what we experienced here yesterday, you can see that we're right at the golden pocket, right at the point between the 0.5 and the 618, right on the 618, putting in this pattern, which typically you get these kinds of moves, and I used to call them earlier in my career pitchfork reversals, because on a higher time frame they look like a little fork, right? You get your rounded bottoms looking like a fork after the AB bases are printed. So that's pretty much what I'm seeing in Bitcoin and the entire cryptocurrency market. And if you look at the altcoins specifically, it's pretty much the same thing, right? So this is the total market cap excluding Bitcoin, so basically total 2, all altcoins in the market aggregated. And you see you have, again, an inverse head and shoulders, but this inverse head and shoulders is slanted. Still an inverse head and shoulders, right? Sorry, right here. That's more like it, right? Left shoulder, head, right shoulder. This is the breakout, right? And this is the retest. So you had a corrective breakout and then a corrective retest. Now you're on the neckline. And again, this neckline is a 300 plus day neckline, right? 305 day neckline that you're looking to break out from. Now, let's talk targets. If you're trading this, when do you want to take profit? When do you want to look to take profit? Should you look to take profit? Okay, those are all questions, you have to answer yourself. Really depends on your trading strategy, what you're looking to do. I personally am looking to take profits, given that a lot of positions I've held have just been kind of not working for me, and I'm looking to take profit and reinvest the profits, given that if we do break out, we're going to break out impulsively, and those are relatively easy to trade, right? Up until now, for 300 plus days, we've been trading corrective price action, up and down and up and down and up and down, right? No rhyme or reason. Sometimes it's a zigzag, sometimes it's a flat correction. Very, very challenging to trade. But if you do break out, you break out in 5 waves, and you come back in 3, and you know how to get back in. It's pretty simple. So for me, I'm taking profit up here because I know quite easily, relatively speaking, how to get back in should I choose to get back in to an asset, okay? And the targets are quite simple, right? Given that these are inverse head and shoulders, you're essentially just taking the height of these inverse head and shoulders superimposed from the side of breakout, and those give you those targets, right? So for the total 2, it's about 892 billion, thereabouts, okay? And that actually is confluent with this area right here, where you can see there was some support here, right? So it's going to be resistance given that we're below it, okay? So that makes sense to me, and I've got an alarm for that, just telling me, generally speaking, when altcoins will find resistance, okay? And now, if I turn to my, let's see, what do we want to do? I wanted to show you something else. Specific targets for certain altcoins. Okay, so we could just take a few as an example. So if you go on the daily time frame, I know what I wanted to show you. I know what I wanted to show you. Okay, so generally speaking, these altcoins should go up an average of 50%. Okay, so if you look at this inverse head and shoulders, you take the technical target, you get about a 50% increase before you get some resistance. So like I said, it's likely we get 5 waves up and 3 waves down. Those 5 waves up come to that area right here. So in the aggregate, altcoins should go and gain 50% market share. Okay, now if you look at some specific altcoins, and Bitcoin, before we get ahead of ourselves, because a lot of people just want to know about Bitcoin. I know a lot of people only trade Bitcoin. And we've talked about this before, but Bitcoin, we can see, is likely to put in about 47%, we said, right? To our target of 40,770. Almost 40%, okay, from here. Almost 40%, okay? So that makes sense, right? That makes sense. But if we go to some other altcoins, especially lower cap altcoins, you can see that the targets are a little higher, right? So how do I take these targets? It's not always straightforward. Like Dent, for instance, one of the trades I'm taking. I'm looking at all of this, and I'm not exactly sure what to make of it. But the way I did it was, I saw that there was confluence here in terms of support and resistance. So I took this trend line because it was resistance, support. Very important right here that you highlight the support, because that's the neckline. Everything happens from the neckline. There has to be a neckline that was broken and retested. Okay, so that's my idea. That's my sort of reasoning for really trying to find a veritable viable neckline. And I believe that this is it, right? If this is all some sort of pattern, it has to have a neckline, and that neckline, for a breakout to happen, that neckline has to be broken and retested, or else you're not getting a breakout. Okay, it can't be that this is your neckline down here, because this it can be because it was broken and then retested, but it's unlikely, because look, this is retested once, this is retested twice, and then you come back here. It doesn't make any sense. Once you break out, you should break out impulsively, right? So that's why I chose not to pick that, and rather I picked this. So having picked that, essentially I did the same thing. You know, I took the height of this pattern, whatever it is, superimposed from the side of breakout, and that gives me about an 87% move. And what I like about this is, if you look, you can see the target. Look at the target. Look at this. Look at the confluence. The target gives you pretty much the bottom of this distribution range, right? This bear market distribution range, the bottom was right here, right? This was the support. This was support for this asset for 500 plus days. What? Let's just measure real quick. Yeah, almost 500 days. So for almost 500 days, this asset was being supported by this trend line. Okay? And so it stands to reason that any breakout is going to find resistance up here. And so after I did my pattern using this neckline, I got this. The fact that this was the orthogonal sort of trend line that was created after having taken my target, gave me more confidence to say this is a good target. I hope that makes sense. So I'm just putting into my my exchange, give me my profit here, and then I will wait for a 3-wave move down, right, where pretty much 50 to 60% of the pump will be retraced upon. Then I'm getting back in. So that's my reasoning, and it's just a rinse and repeat situation for all of my trades, because I think if you're going to take profit on long-term trades, taking profit on wave 1 makes the most sense, because remember, wave 1 is going to be the most retraced upon move. Okay, for those of you that don't understand what I'm saying, it's basic Elliott wave theory. Everything goes up in 5, it comes down in 3 when you're talking about impulsive price action, and that first wave goes up and comes down to between 0.5 and 618. So between 50 and 61.8% of that first wave up. Okay, that third wave is usually the longest, usually the fastest, but then is only retraced upon between 23.6 and 38.2%. So it doesn't really make sense to take profit on a wave 4. Okay, but it does make sense to take profit on a wave 2 and enter trades after wave 2. Okay, and then obviously you get wave 5. So hope that makes sense. All right, moving on. I did the same thing for Dodo. Okay, this is particularly intriguing because your percent gain from this trade is a lot more than most assets, right? So you see Bitcoin may gain 40%. Altcoins in general, on average, based off of the Tonal 2 chart, are gaining about 50%. But this altcoin in particular, very volatile, low cap, is gaining about 223%. So it's a really, really good move up. Obviously, it's hard to get in just because, it's very volatile. But once you're at support, which it looks like you're at, right? Look at this. This is more likely than not a support level. You get in and you ride it all the way up here. Now, how did we get that? Okay, in this case, I did not take this as an inverse head and shoulders or some sort of pattern trade. Rather, I'm taking this as a zigzag. So if I look at this, I count 5 waves up and I count 3 waves down. But obviously this is not perfect impulse. This is a zigzag. So this is an A wave, this is a B wave, and now I'm looking to basically long the C wave. And so if you do that, based on your Elliott wave theory, that wave A retracement of wave B typically gives you wave C between 1 and the 1, 2, 3, 6 Fibonacci extension. So you take your Fibonacci extension tool of wave A, that's the orthodox high, or whoops, let's try that again. Guys, if you're getting value, please like, share, and subscribe. Wave A, bottom, all the way to the top, that's the orthodox high of wave A, all the way to the bottom, down here, okay, and then look at where this trend line lies. So I'm going to show you how I drew this trend line in a second, but look, basically your target should be between the 1 and the 1, 2, 3, 6, right? That's what Elliott wave theory states, that wave A retracement of wave B typically yields a wave C between the 1 and the 1, 2, 3, 6, between 44.7 and 59.1 cents, okay? Now, that's almost exactly where I have this trend line. And how did I get this trend line? Quite simply, support and resistance. That was support here. That was resistance here. So I have a lot of data to draw this trend line, okay? I have the support here. I have the resistance here, okay? And this is long standing. This is, many months of data. And so I got 1, 2, 3, 4 points over many months. It's very likely that whenever we come to this area, we experience some resistance. And just look at the symmetry here. That's going to give you your inverse head and shoulders for the next breakout. And when you're thinking about bullish trends or bearish trends, just think chain reaction. A series of bullish patterns breaking out and then forming more bullish patterns, then those breaking out. So that's what I'm seeing, and that's why I'm taking that as my target for Dodo, right? So from here all the way up there. So that's a really good one. Okay. So next up, DYDX. So this one is really, really bullish. This is one of the most bullish assets on my watch list. Okay? And the reason this is really bullish, if you can't tell immediately, is because you're essentially forming the same thing that we just saw in Dodo at the neckline. Okay? So this is 5 waves up, and this is a version of 3 waves down, but in the shape of a triangle. It's not a perfect triangle. Actually, if you look at this, this is an inverse head and shoulders. This is a bullish reversal pattern. But what you want to see here is essentially that you've got 3 waves down, and then what comes after is a consolidation reversal, all making that inverse head and shoulders. Do you see what I mean? So essentially, you can treat this the same. 5 waves up, 3 waves down, A wave, B wave, C wave between the 1 and the 1, 2, 3, 6 of the A wave retracement of the B wave. Okay? You can also take the pattern trade here, which should give you a similar target. Let's see. I believe that's true. If you took the high and low here, yeah, and then you superimpose it from the side of breakout, right? And then if you took the A wave to the top, retracement of the B wave, you see that? That's perfect confluence right there. That pattern trade gives you this, right? But then the Fibonacci extension, A wave, B wave, your C wave comes exactly between the 1 and the 1, 2, 3, 6, just like the theory tells you it should, right? C extends to between 1 and the 1, 2, 3, 6. More specifically, our target here is about 6.86, okay? And that from here is a nice 175% move, 173% move, okay? So there's a lot of assets that are only going to go 40%, 40 to 50%, right? Like Bitcoin, like some other small cap or large cap assets. But then some smaller cap assets are going to go a lot more, okay? Like DYDX, like Dodo. ETH. What's ETH doing? So same reasoning. I'm looking for a neckline, all right? I clearly have a nice cup and handle, and that's my bear market accumulation, and I chose this as my neckline. The neckline is everything. So when you're trying to do pattern trading and you're trying to find targets to the upside, you have to figure out what the neckline is. Without a proper neckline, none of it makes sense, because the breakout is going to take place from the neckline, and the measurement is going to be done from the orthodox low all the way to the neckline. So the neckline measurement is everything, and here the neckline is clearly where we have the most data and where we've broken and retraced to. So broken here, right? Retraced here. So this is the neckline because it was resistance here. Whoops. Let's zoom in for a second. The neckline was resistance here. Now it's support over here. Okay? So resistance, break, come back, retest as support, and on the smaller time frames, you can see, if you look closely, you can see a nice rounded bottom here that's being created right on support. This is very encouraging for continuation to the upside, a change in trend, a change in local trend. Okay? Add to that, it's hours away from a full moon. Okay? So if you look at Ethereum and you do that analysis, you're essentially getting a 96% move, right? That's basically the height of this this cup and handle superimposed from the side of breakout. That gives you 96%. And you have a nice confluence because that takes you to your next high, okay? Your previous high. Basically, you're going to slightly make a higher high from your March 22 high right here, okay? So your target's up here around $3,700. So that's ETH. Nice 96% move. Okay, Litecoin. Also a tricky one, but again, my strategy is to focus on the neckline. Okay, if I have this level right here and this level right here, I know that's resistance, that's resistance. Okay, I see a little bit of activity here. This is tricky right here. This is tricky, but I know that if this is a neckline, it has to be broken and retested. So this can peak out above. It's fine. Actually, this is confusing, but it happens. What's important is where's the break and where's the retest. That's where you want to confirm the neckline, and this is the confirmation, right? If the neckline is lower like this, then you can't break out from here because you haven't retested the neckline, right? So this is my neckline. This makes most sense. And if that is my neckline, then I take the height of my inverse head and shoulders, which is going to be this right here. Okay. And I superimpose that from the side of breakout. And that gives me about, 163.86. Okay. And that again takes me to a previous high, which is something you want to see, right? Typically, price is attracted to previous highs, previous nodes. So that's a previous high, and that's where this breakout supposedly or presumably takes us. And add to that, if you take your Fibonacci retracement tool of this entire move down, okay, from the top to the bottom, what do you see? You see that the breakout of this bear market accumulation takes you right back to the 0618, which we know is always a point of contention, a point of resistance when you're retracing, when you're going back on a move. So this was down for however long, for a year plus, right? You do your consolidation reversal, you come back up, you're going to find resistance at the bullish, at the phi ratio, at the 0618. So that doesn't surprise me that you're indeed finding resistance at that level. So around 170. Okay. So that's Litecoin. And Litecoin is one of my favorites just because I've talked about this before. Its entire lifespan, it's been in a leading diagonal. It's essentially been consolidating bullishly. So it hasn't broken out yet. So when it does break out, I do expect really violent moves to the upside. So here, for the first move, I wouldn't be surprised if you didn't get that 91% move to 170. Okay, Zilliqa, last but not least. And again, if anybody's on and wants me to look at an altcoin and altcoin target, just let me know. Otherwise, this will be the last one. Okay, Zilliqa. Again, this is a little tricky, but I'm using the same strategy. I'm looking for a neckline. I'm looking for support and resistance of that neckline, and I'm looking for a breakout and retest of that neckline. Okay, here I have a inverse head and shoulders, which is a bullish reversal pattern, which you typically get when you're coming out of these types of trends down and then reversing them back up, and vice versa. Well, vice versa, you would get a bearish reversal pattern. But in any case, I see that there's resistance here, a bit of resistance here. Here, I actually have my breakout. Okay, my corrective breakout, meaning I broke out in 5 waves. okay, with the ending diagonal, if you can see there. And I came back in 3 waves, right on the neckline. Okay, this is why this is my neckline. It makes the most sense for the calculation. And again, I take the height of the inverse head and shoulders superimposed from the side of breakout, and what do I get? I get about an 88% move, 89% move, and that again takes me to a level of confluence. If you look and see, you're not only making a higher high. Whoops, I didn't mean to do that. There we go. Let's get rid of this. Here we go. You can see the confluence here, right? This move executes, you're essentially finding resistance at a point where price has previously, historically found resistance, right? When you were coming down, you retested this level as resistance. It was support prior to that. So this is going to be an important level around 2.4 cents. So this is my target. And again, all these targets are within reason, right? If you look at all the altcoins in aggregate, you understand that the average move for this breakout is going to be about 50%. So if you're having a breakout and the target's like 5% up, it's unlikely that that's accurate, right? More often than not, the breakout targets are going to be somewhere between 30% to 150% or something like that. Do you see what I mean? All in all, they're going to average to about 50%. So that's pretty much what I'm looking at. This is why I'm excited for a bullish breakout. That's how I'm looking to take profit for this breakout and where I'm looking to take profit. Guys, if you got value, please like, share, and subscribe. That's all I've got for you today. Hope this was helpful. Hope this was useful. Take care. Enjoy the full moon. Hope you're well positioned. And I'll see you tomorrow. Bye.